The rupee will be the big vulnerable, but besides that, Tata Consultancy Services and Reliance Industries in a neck-to-neck race in market capitalization. Darshan Mehta will tell us where they stand. ITC shares are only half as expensive as its biggest competition. Agam Vakil will analyze if the valuations are justified. Vedanta guides for a weak performance in the current financial year. Nikki Mirchandani will tell us what's got the metal giant worried. And cricket may be the best thing RNFS has invested in. Sajid Mangat will tell us all about that bet that is paying off. TCS and Reliance Industries have been in a cat and mouse game for the past few months, trying to outdo each other in the market capitalization game. TCS took the lead just this month. Darshan Mehta is here with an analysis of just how much steam may be left in both the counters, considering they're the two of the biggest heavyweights on the Indian bourses. Darshan, good morning.
Good morning. And we've seen, Neeraj, that both of them, the market caps pretty much have actually been at par with each other. A few months ago, it was Reliance which was much ahead, but of late, Reliance has been underperforming and TCS has actually gained market share. So pretty much it's a race to who becomes and who stays the largest listed entity in India, and a race pretty much now becomes the 10 lakh crore market cap. There's still time, but if you see the top 10 companies in India in terms of market cap, these two seem to be pulling away. It's their own game. So TCS and Reliance. The next bet is HDFC Bank, which has been a constant 3, while the others are pretty much lower. So it's a race that it's a two-horse race at this point of time, and both of them have actually pulled away from the rest. Now, if you take a look at what we try to do is find out who has the edge now, what are the factors indicating, and who will come out much stronger. So if you see what has happened on a year-to-date basis, if you're looking at it, TCS has managed to outperform, and even on a month-to-date basis, it's TCS which has managed to outperform Infosys. This month itself has been bad for Reliance, which is down almost 3%. Now, if you look at the weightages, Reliance has a much larger weightage on the Nifty, 9.5% compared to TCS's 4.8%. For the Nifty to now move, Reliance needs to perform. So the contribution this month itself, Reliance has contributed to a 43-point downtick, while TCS has continued to move up on, and that is helping the Nifty, stem off some of the losses that Reliance is putting up on the index. Now, if you're looking at what the analysts are saying, they certainly have more faith on Reliance at this point of time, because 61% of the analysts have a buy recommendation on Reliance with an 8% sell. The number is much higher on the sell side for TCS. And even if you take a look at the Bloomberg consensus estimate, the percentage upside as per Bloomberg consensus estimate is a 12% upside on Reliance and a 4% downside on TCS. So all the factors currently are pointing out that the street is anticipating a better run from Reliance. Now, in terms of most bullish calls that are coming in on both the counters, so we are looking at a race on who will go in higher, or probably who will reach the 10 lakh crore market cap first. So if you take a look at the trend, Edelweiss, Nomura, Goldman Sachs, all of them have indicated these are the top 3 in terms of target prices. So they still anticipate anywhere an upside of 20 to 30% on Reliance, while the best of targets still indicate just a 7% upside on TCS. So the street is still much more bullish on Reliance at this point of time. The other factors that we're looking at is valuation. Reliance on a valuation basis is pretty much trading on near the FY21 valuation, so it's slightly higher. The FY21 number is at par with the 10-year average. For TCS, it's still expensive. 22 times on an FY21 basis compared to the 10-year average. So valuation-wise, Reliance offers much more valuation support than TCS at this point of time. The other factors is let's take a look at the companies individually. What are the concerns and what are the positive triggers for them? For concern for Reliance is that the refining and the petchem margin is not working. The core business is weak. There is significant amount of over dependence on performance of the retail business and performance of the consumer business as well as Jio. There is lack of pricing power in the telecom business, and debt seems to be a concern for them. What probably will work for Reliance is the clarity on the InvIT structure for the telecom infra. Fundraising, if any, for the telecom and retail arm. A lot of notes have come about it. Growth for Jio in the retail business is something that you need to watch out for, and capex is over in the business. So the core business, oil and gas, even though it's not doing well, it's a cash generating business. So if that starts firing and Reliance retail and Jio start firing, Reliance could see potential upsides that could come in. Now, what probably are the concerns and what could work in for TCS? Valuations are rich. So a lot of reports that I read indicated that there is no room for disappointment because valuations are already rich and trading at a premium. Tight labor market and US norms, you see Donald Trump tweeting everything every day, so that could be one of the potential. If he tweets something negative on the H1B norms, or that could mean negative for some of the IT companies. And there are growth concerns in BFSI and retail because they are already growing at much faster pace. So whether this run rate will continue or no, that is something that we need to watch out for. What are the triggers? The management in the recent interactions have indicated that there will be double-digit growth in the medium term. It has a well-diversified portfolio with a strong presence, and digital seems to be the new trend as far as some of the IT companies are concerned. They have pushed significantly in the digital space and are expecting significant amount of growth. So on a like-to-like comparison, what the valuations are, what are the analyst trends indicating, what the Bloomberg consensus is indicating, at this point of time, it seems that Reliance seems to be in a better spot, but as of now, TCS is performing better.